Actually, the expectations were really high, and the numbers have come in line with estimates. More miss than beat coming in from the company. If you look at the revenue growth, it has come in at around 9%, which is a healthy growth. But the expectations were high. We were expecting a 13% growth. In terms of the margins, the margin improvement has been around 50 basis points. Again, in line with the expectations. But the street was expecting that they might surprise on the upside, given that benefits of the royalty payment itself was around 40 to 60 basis points. So there was an expectation that the company can beat that as well. In terms of the bottom line, we are looking at a very healthy growth of around 22%. But again, our expectation was around 28%. Now, to run you through the key highlights of the segments, consumer durable has come out as a surprise with a 24% revenue growth. It looks like the volume and the value growth will match here because we are not seeing a lot of price realization pressure. So this is a good point coming in. But the good performance in the consumer durable business has been offset by the disappointing performance in the switchgear and cable business. So cable business saw top line, so it was a flat top line for cables business. But in the switchgear business, we saw a very muted growth of around 5%. And this compares with the high double-digit growth that we have seen in the last 2 quarters. So this comes as a deaccelerations. Also, if you look at the brokerages, most of them say that it is a miss or in line. So just run you through a bit. CLSA says it's largely in line. They retain a sell with 362 target price. Citi says that the revenue growth miss is disappointing, but the margin improvement was broad-based. They maintained their buy with a target price of 445. Lastly, JP Morgan, overweight stance on the stock. They maintained the target at 416.
All right, thanks a lot for that, Anisha.